$40 billion, and it shows you that you have to get bigger in the chip industry to thrive and survive. According to the Wall Street Journal, the deal could be announced as soon as next week. No guarantees, though, as talks have only recently restarted. Now, AMD is a lockdown winner. The stock has rallied nearly 90% so far this year, and that's thanks to homeschooling, remote work, sales of computers, gaming consoles, and other devices that use AMD chips have been soaring. Xilinx, meantime, makes chips used for wireless communications, data centers, cars, aerospace, and chip deals are hot this year. Just a few weeks ago, last month, the world's biggest chip maker, NVIDIA, said it was buying ARM Holdings for $40 billion, and that's probably what's motivating this deal as well. You have to keep up. In order to do that, consolidation is needed.
Consolidation in chips. I can see it in my... Okay, good stuff. Thank you. But you got to tell me about Alibaba. I saw it hit $300 a share yesterday. It's $298 today. It's been on a tear.
This is called a breakout, especially if you take a look at this type of price action where you've seen a spike in the last few weeks for Alibaba, hitting a record above $300 a share yesterday, which values Alibaba at roughly $800 billion and change. Now, the fifth largest tech company on the planet, worth even more than Facebook, and right behind Google's parents, Alphabet, Apple, Amazon, Microsoft are the world's three biggest tech companies, essentially the largest companies in the world. You have Saudi Aramco somewhere in the top five there. But for Baba, the investors are buying the stock right now because they think that COVID means more of China's 1.3 billion consumers are now buying more online. And its financial arm is set to launch one of the biggest IPOs in global stock market history in Hong Kong in the next few weeks, pretty soon. And Baba just said that its cloud computing unit will be profitable in the next few months. A lot of positives, don't you think, for a company that dominates the world's second largest economy?
You call it Baba as opposed to Alibaba?
Short, you know, that's the ticker symbol, right?
Baba. Okay, I got it. Thanks, Susan. Amazon Prime Day. Did you know? It starts next Tuesday. Are you going to tell me that they might have a hard time keeping up with demand?
Would it surprise you? No, because you're expecting huge volume and pandemic challenges in warehousing and delivery that goes along with that. So last year, we had $7 billion in sales, and analysts say that we will easily surpass that this year because online shopping is strong heading into the holiday season. Also, the shift in the calendar, usually you have Prime Day taking place in July. It's now moved to October, which means there's a lot of pent-up demand and sales expected. However, there may be some limited supply because Amazon has been prioritizing room in their warehouses for essential items, and demand has been huge during COVID. Amazon has hired 170,000 extra employees. They're planning to open 33 new fulfillment centers this year just to keep up. So if you add Prime Day on top of that, I mean, that's a lot of gridlock. Now, JP Morgan forecasts that this year's event could bring in sales of $7.5 billion, which would be up 42% from last year. And then eMarketer estimates that Prime Day sales could hit close to $10 billion. Let's just say it's bullish.
And that's why
the best outcome for the stock market is a divided Congress, meaning that Republicans hold the Senate, the Democrats hold the House. The S&P 500 should rally 10% near term because Biden, if he wins the White House, he won't be able to roll back those tax cuts as easily with a divided Congress. Now, if there's a Democratic sweep, Goldman predicts that would mean a 1% gain for the broader market, which will likely mean tax hikes, yes, but also more spending from the government. So a lot of these spending packages to come. The worst outcome, according to Goldman Sachs, is a contested election, which Goldman predicts will drag on the stock market by 8%. But the takeaway is that gridlock is actually good for investors because you have checks and balances in place. And historically, according to CFR research, split Congress usually means a rally for the broader stock markets 75% of the time after the election. That's surprising.
And with them on a divided Congress, I can see how that works in Wall Street's and the economy's favor. But what I cannot see is a clean sweep by the Democrats, tax hikers galore in the White House, the Senate, and the House. I can't believe that would result in an upside move for the market of any kind.
No, well, business taxes will go up to 28%, so will income taxes. So that's why checks and balances split Congress is probably a better case scenario for investors. So Biden has the support of 30 S&P 500 CEOs, but raising far less money from these actual 30 CEOs, just over $500,000 so far. So take a look at President Trump. Yes, he has fewer CEOs donating to his campaign, but raising far more. So 15 S&P 500 CEOs supporting Trump, donating $2.5 million. That's almost 4 times what Biden has raised, and that includes Las Vegas Sands billionaire Sheldon Adelson, Oracle CEO Safra Catz, MGM Resort CEO William Hornbuckle, and then we'll throw in Stephen Roth of Vornado as well. Now, these are not surprises since they've been vocal and public with their support for the president's pro-business agenda. Now, for Biden, supporters include Disney's executive chair Bob Iger, Merck's Ken Fraser, and DuPont's Ed Breen. Overall spending, by the way, for this year's election approaching $11 billion, and that'll be higher than the $7 billion that was spent 4 years ago in 2016.
I wonder if Bob Iger is having second thoughts about giving money to Democrats after the Democrat governor of California has really messed up Disney by not allowing them to reopen their theme park.
I'd be curious to look at the bottom line of Disney once corporate taxes go up to 28%.
Yes. Oh, yes.
And how investors react.
What CEO of a company says, okay, tax me, I'll give you money to do it?
Well, the Google self-driving rival to Tesla is the first to start shipping customers around in driverless cars in Phoenix. Yeah, that's
It started?
It started, yes, that's right. And some shade being thrown by Elon Musk when he was asked about it, writing on Twitter, Waymo is impressive, but a highly specialized solution. The Tesla approach is a general solution, and the latest build is capable of zero intervention drives when we release limited beta in a few weeks. Now, Tesla's autonomous technology is another reason that the stock has rallied some 400% so far this year. But Google-funded Waymo is the first to start making driverless rides available now to all users in the Phoenix area. This is very exciting, but it only starts within a 50-mile radius right now. Maybe they'll expand in the future, but Waymo remains the consensus leader when it comes to driverless tech. It's the first company to offer paid trips in cars without drivers, and other self-driving industry leaders include Uber, Tesla, and even GM is investing in this new technology. But I guess you've criticized self-driving before in the past, saying that it probably won't happen in your lifetime. It might now, right? Now that's available
look,
in
it's
Phoenix.
a start. I understand. It is a start, but it's hardly happening on a mass scale.
Right. So I just need to ship you to Phoenix, Arizona to get those rides in.
This depends on my life expectancy as well.
30th and next year at least. So extending the shutdown for another 4 months and pushing back the original target of reopening from January 2021. Broadway theaters have been dark after closing on March 12th. They shut down everything, including 16 that were scheduled to open, and then postponing the Tony Awards. And Broadway grossed a record $1.8 billion last season. They attracted a record 15 million visitors, 65% of which of those come from overseas. So think about the external economy, like you said, the restaurants and the hotels. I mean, that's nearly a $15 billion industry hit right there.
Yep, and that's a huge hit to New York City.
Yeah.
And you keep them closed till the end of May. My goodness me, that is a hit and a half. Moving on.
These stocks sounding very bullish, predicting that Zoom will get to 550, best in class when it comes to video conferencing. Amazon's up close to 2% in the session, and this is because Mizuho predicts 4,000 for the stock, and not even the most bullish call out there. You have Pivotal calling 4,500 for Amazon stock.
What's the high on Amazon? It was about 3,300
and change. And we're heading into Prime Day next week as well, with channel checks, according to Mizuho, shows that consumer demand is higher than expected in the past quarter and going forward.
Do you remember Pierre Farragut?
For Friday, as you mentioned, to end the week with gains. And this week, by the way, as you mentioned, best week since almost July. You want to go back that far, because we saw the 500-point gain this week for the Dow, which is the best single-day rally going back to 3 or 4 months for the Dow Jones Industrials. And this is despite the fact that we had Mitch McConnell today, again, pouring cold water on a stimulus package before the November vote. In fact, he even said about the airlines, a specific sector-targeted stimulus bill. He says airlines only bill unlikely as well as the election nears, but he wants to do something. Something needs to be done for the American economy.
Despite all this...
But the Goldman called today saying that a divided Congress is probably the best outcome for the stock markets, predicting 10% gains afterwards, after the election. Well, usually, CFRA says that the market usually rallies 75% of the time if we do have a divided Congress afterwards.
So that's election speculation, isn't it?
In place. That means you don't get everything that you want, and in Biden's case, you don't get tax hikes up to 28% for businesses.
But if it's a Trump win with a Republican Senate still, and a Democrat House.
Ooh, that's interesting.
Sky's the limit. I mean, you're open up to more tax cuts and all the rest of it. Okay. We have